This is Bloomberg Surveillance, the year ahead. I'm Tom Keene in New York with Francine Lacqua in London, and it has been an absolutely extraordinary year. I really can't find, Francine, words for this 2020.
Yeah, I think there are three main themes, Tom. The ones that were negative for the market, so COVID, but then positive is finding the vaccine, and then the number of other things is the scarring of the economy. But actually, if we managed to scar it much less than it could have been because it was pretty contained and the lockdowns were pretty contained. So it's you know, the most difficult thing about 2020 is actually remembering when March ended and December began.
Well, it's going to be interesting to say the least. We have wonderful guests with us in this half hour to get you prepared for 2021. What is my chart of the year? Well, how about one of the gauges of how we measure inflation, I should say, and it's just been a major change. This is the United States guesstimate 10 years out, the five-year forward guesstimate, and with a vengeance, it's come back right to a tipping point. And that ambiguity that we're going to see into 2021 is really front and center. Yes, in the bond market. Yes, in the commodity market. But also in equities, that great double-digit surprise of 2020. We spoke with our Gina Martin-Adams of Bloomberg Intelligence.
Higher inflation is only bad, actually, if inflation accelerates faster than growth. Historically, what you've found is over the decades, when growth is accelerating faster inflation, whether inflation is disinflating, even close to deflating, or reinflating, that growth inflation equation is what's important to driving equities. So if you have a reinflating environment, but you also have a growth environment that's improving, you should see a reasonable equity market emerge.
I see, Gina, and I recall the clearest tone, you begging us to understand earnings would be better, margins would be better. The bulls, and I mean the overt bulls on the street, have agreed with Gina Martin-Adams, and we got what you predicted. What do earnings and what do margins look like forward? Can they get ever better?
We should definitely see earnings and margins improve into 2021. I mean, frankly, comparing to double-digit declines in 2020, the year ahead, at least in the first half, should be very positive. As a matter of fact, analysts are expecting 20% growth. Our macro model, which is naturally going to be significant, is going to significantly lag any improvement in the earnings stream, suggests at least 12% growth in earnings into 2021. So pretty much no matter how you swing it, as long as we make baby steps in the economy, we should see double-digit growth in earnings in the year ahead. I think the drivers of those earnings growth is also really important. It's not just margin improvement, but it is revenue improvement. It is a rotation to smaller companies, some of the laggards and the companies that have really struggled in the 2020 environment of shutdowns should start to do much better into 2021.
Gina, good morning. How long does it take for actually the economy to recover what it's lost since the suspension of the economy? And, you know, because of lockdown. And once we have that velocity, what does that mean for earnings?
Yeah, a lot of that is really going to depend upon the sequence of vaccine distribution globally. And I think that's still a big question mark, is how quickly can we get the globe vaccinated? How quickly then will we be able to recover? Most economists are saying it's at least 2022, 2023, which frankly is quite normal for an environment in which we had such a severe shutdown and recession emerge in the first half of 2020. I frankly think that most people are expecting weakness, however, and this is what's really important to drive the equity market, is the expectation is we're going to be struggling for quite some time. That means that the upside potential is greater if we can beat those relatively low expectations. That's what's characterized a lot of 2020 is nobody thought we would see such vast improvement in the economy already. And I do think that 2021 will be more of that, more of the same. And then we'll slowly move into an expansion phase, which is more the norm for the economy.
You know, it's so quaint to see someone like David Kostin at Goldman Sachs go out 1 year, 2 years, 3 years out. Gina, I look at the great bulls of this pandemic. Ben Laidler at Tower Hudson. Tony Dwyer at Canaccord Genuity has been brilliant about saying, if there's no recession, forget about it, up. And you've been great as well. And then there's David Kostin, who goes out the x-axis not only to 2021, but 22 and 23 as well. Do you have the courage to follow David Kostin out the x-axis?
Yeah, and maybe I'm not that brave. I mean, frankly, our forecast models are all somewhere between 3 months and 12 months time horizon. I do agree with the notion that as long as you're growing, as long as inflation isn't getting out of control, as long as the Fed critically is relatively supportive, then stocks will most likely go up most of the time. But I do think you have opportunities. As stocks go up, you can obviously have 10, 15, 20% corrections in the midst of that uptrend. And we do try to look for those as well. I think in general, when you're just coming out of recession, you're still at a point where you do see much stronger return possibilities going forward. I think the consensus has been entirely wrong about that for most of the last decade, despite the fact that we climbed out of recession in 2009 and didn't hit another recession until 2020. The vast majority of sentiment was still very bearish towards stocks. So we've still got that longer term sentiment background. We're also coming right out of recession once again. That's usually a pretty good time to start to move out on the risk curve, anticipating a cycle that generally endures for quite some time.
Coming up, a really interesting set of discussions. Nouriel Roubini flat out doesn't believe in Bitcoin. He is heated and forceful. That will be must listen, must watch. Benoit Cœuré has a different mandate at the Bank of International Settlements. He's looking less at Bitcoin and the future of digital banking. Coming up, Roubini and Benoit Cœuré.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Bitcoin might be a good investment opportunity. I have no view on that. I'm not providing investment advice. That's not my line of business. But it does not have the features of a currency because you want to see currencies being stable, and stability has to be underpinned by policy, and policy has to be underpinned by politics.
Currency or not a currency, either way, Bitcoin saw a dizzying rally in 2020 that has captivated the professional investing class in a world of rock-bottom interest rates. Well, here's a notable skeptic, economist Nouriel Roubini from the NYU Stern School of Business on the world's largest cryptocurrency.
Well, first of all, I agree with Cœuré. It's not a currency. It's not a means of payment. It's scalable. It's not a unit of account. It's not a single numeraire. It's not a stable store of value. So it's not a currency. But it's not even an asset. An asset has to either have income, capital gain, or some uses. Stocks, bonds, real estate have income, have capital gain, have uses. Like, for example, real estate provides you housing or storage services. Gold doesn't have income, has capital gain, but also has utility, jewelry, and has use industrial, like silver. Well, in the case of Bitcoin, it doesn't have any income. It doesn't have any use as a means of payment or as a unit of account or a numeraire. And it's potential to give you a capital gain or capital loss that is based on no intrinsic value. I mean, usually you have a price and then you have some earnings, some dividends, some income, some rent, some something to value something. Mm-hmm. Or if you don't have it, there is some use, like means of payment. While Bitcoin, like the other cryptocurrency, has none of those characteristics. So defining it as an asset is not even an asset. It's a purely speculative asset. It's like a Ponzi game where the value goes up only if there are other retail suckers going to buy while the whales are dumping what it is. So it doesn't have an intrinsic value. So it's not a currency, it's not an asset.
My book of the year a number of years ago, Nouriel Roubini, was Ken Rogoff's incredibly courageous The Curse of Cash. And he talked about a cashless society, and he constantly circled back to the criminal activity of Bitcoin. From where you sit, is Bitcoin supported by crime?
Well, first of all, it's supported by manipulation. There are academic studies showing that the price is being propped up by Tether, that is a pseudo-stable coin that has been issued by fiat, by a shady organization that is now under criminal investigation in the United States. Every time the price falls, they create out of nowhere more of this Tether that is used to buy Bitcoin, first point. Secondly, actually, law enforcement authorities prefer to crack down on crime when it's done via Bitcoin or cryptocurrencies, because it's quite easy to see eventually who's behind that public key and who's behind that private key. And actually, from a law enforcement point of view, it's more easy to go after the dark web and lots of other stuff in cryptocurrencies. They claim that they're anonymous, but they're not truly anonymous. And therefore, that, in my view, that's not a concern. The argument is that we're going to have a central bank digital currency that's going to dominate any private payment system, including cryptocurrency, because it'll be safe, instantaneous, cheap, and absolutely settled and cleared in a moment. And these central bank digital currency are not going to be based on blockchain, because blockchain is supposed to be public. These are going to be private systems. It's supposed to be decentralized while be centralized. A blockchain is supposed to be permissionless while it's going to be system is permissioned. And blockchain is supposed to be trustless while these systems are going to be based on a central bank and a few trusted verifiers and authenticators like commercial banks. So people get excited when central banks are talking about central bank digital currency. They say even central bank got converted into crypto. Has nothing to do with crypto, has nothing to do with blockchain. It's going to be a centralized, permission, private, and based on trusted authority verifying transaction, not a bunch of shady miners in jurisdiction where there is no rule of law, because 80% of all crypto mining is occurring by miners that are located in China, in Russia, in Belarus, in another jurisdiction. And that's why this is becoming a national security issue for the United States. The White House and other law enforcement authorities are worrying about the fact that the mining of cryptocurrencies is occurring dominantly in a centralized way in a bunch of jurisdictions with no rule of law that are strategic rivals of the United States.
Okay, so going back to the central bank, right? And you're definitely fired up about this, Nouriel. You're always fired up, but I have to say, particularly when it comes to some of these cryptocurrencies. So what will these digital currencies look like that central banks are working on? Like, would there be an overarching, who's actually the right entity to make sure that they're using the right thing?
Well, first of all, in the current system, only commercial banks have an account with a central bank. Once we have a central bank digital currency, every individual, every household, every non-financial corporation and business can have an account. So we don't need to use Venmo or PayPal or Alipay or WeChat Pay to make payments. We don't need to use bank accounts and deposits. And there'll be another system for payments that is instantaneously safe and cheap. Secondly, the MAL and the KYC is not going to be done by the central banks, but anybody who has a bank account is already verified with the right anti-money laundering and KYC can have an account with the central bank. So you're going to delegate to the financial system the job of making sure that the transactions are occurring safely within countries and across countries. So there'll be an important role of the traditional financial system in doing so. And the future of finance is not going to be crypto and decentralized finance. It's going to be fintech, where there is a revolution in payment system, in credit allocation, in insurance, in asset management. And fintech is based on AI, on big data, on IoT, and digital ideas are going to be all centralized. So the systems are going to be all centralized. The future of money and finance is not decentralized, it's not crypto, it's not blockchain, it's all centralized. There'll be lots of innovation, nothing to do with blockchain or crypto.
That was Nouriel Roubini, fired up, of New York University and their Stern School of Business. Of course, Nouriel Today, NourielToday.com, I should say, as well. Very important discussion on this raging debate of Bitcoin. Coming up, well, I sort of know what I'm talking about, not Francine Lacqua, expert on Instagram. Francine, what's your no filter on Instagram?
I feel, Tom, like I've neglected my social media for such a long time, and then after years of neglect, I finally, came into the 21st century. I'm excited to be talking about technology and actually the dark side, maybe, of technology with Sarah Friar. I know I've been trying to up my Instagram game and Twitter game.
Yeah.
Don't know how I'm doing, but maybe Sarah could give me a scorecard.
I can't say the importance of Sarah Friar's effort. No filter, FT and McKinsey Business Book of the Year. The density of it, the conversation, including their meeting with Pope Francis. Really extraordinary. Stay with us. This is Bloomberg. This is Bloomberg Surveillance, and we welcome all of you now to a great story about a wonderful book. Our Sarah Fryer, our technology reporter, well, the end result is winner of the FT and McKinsey Business Book of the Year. But far more than that was the development of her definitive story on Instagram. No Filter is extraordinary for its vision about how they accomplished this technological feat.
The big thing that I learned and that this book taught me even further is that you can't just cover these companies as companies. You can't just think of them from an economic standpoint. These have become part of the infrastructure of our society. Instagram, Facebook, Twitter, they are figuring out, our information diet, our relationships, our culture, and to think of it from that standpoint not only makes for a more responsible story, but a more interesting story when you think about, as I did in my book, the interconnectivity between what the company's deciding inside, the drama, the egos, the clashing, the debates that occur, and then what happens to the product and how that affects all of us.
What is so important here, Sarah, and you captured beautifully in your book, is the density that you write at. Folks, No Filter is worth reading for the density of the storytelling of Ms. Fryer. And I want to go to page 195, where Systrom and company have to go see the Pope. What was it like for two guys from Silicon Valley to jet over to get Pope Francis set up with his Instagram account?
It was the culmination of a years-long effort to get the most important celebrities and important societal figures to use Instagram, and it was getting bigger and bigger. It was, and it went tour Ariana Grande one day and the Pope the next, and the whole point of it was just to bring on the people that would then bring on their communities to Instagram. It's a very unique growth strategy, very different than Facebook's strategy, which considers every user really the same and just wants more of them, wants more of their attention, more of their time. Instagram said, no, there are people in our world who have a voice that people want to listen to, and we need to get them to use Instagram, and we need to make sure not only that they get to use Instagram, but that they get the star treatment, that the Pope gets us flying over to the Vatican, presenting him with a personalized book full of Instagram photos on causes he cares about, like the refugee crisis and the environment. They went through that detail because they wanted the Pope to have an affinity for Instagram and start using it as something that was important to him to communicate with his constituents.
Sarah, congratulations on a great book. I'm holding the European version. And actually, if you look at what you write, is this for Facebook, so is Instagram for Facebook the best investment it's ever made?
It may be the best acquisition ever. This is a company that they purchased at a 25 million users, 13 employees, no revenue to speak of, for $1 billion, which seemed crazy at the time. Everyone said, why is Facebook doing this just before their 2012 IPO? Now analysts see it as worth more than $100 billion. It is the main driver of Facebook's revenue growth. It is their future in e-commerce. The next big way they make money after advertising. So Instagram has been crucial for them, not just for those reasons, but because of the hold that Instagram has built over our culture and our economy and our society. The fact that if you're starting a business, that if it's at all visual, whether you're a fitness instructor or a baker, you are doing it on Instagram. And that power, all of that power over our culture is now in the hands of Facebook, and they're taking more control than ever.
Sarah, you've spoken to hundreds of employees, former and current ones. Were they ever really worried about cannibalization? If you speak to chief executives, they say, look, in this fast-changing world, you need to learn how to cannibalize your own company to get better. But what was it like for Facebook?
Well, Mark Zuckerberg always preached that. He always says we need to be the ones to kill Facebook. If we don't, who else? Somebody else will. Eventually, Facebook will fade, and we want to be the ones to make the decision how. And when Instagram went forth and tried to achieve that, they grew their user base, they helped crush the competition, Snapchat, and they were well on their way to 1 billion users. Mark Zuckerberg then was threatened. he thought, well, we actually don't want Instagram to cannibalize Facebook. And he started to restrict the resources for Instagram, cut off their ability to advertise on Facebook, cut off their head count, and make sure that they weren't able to grow without Facebook's say and exactly how they were growing, because they didn't want the parent company to suffer. Not the parent company, I should say, the parent company product, the flagship product that is Mark Zuckerberg's legacy. So that was really surprising to me, because we think of Zuckerberg as this really logical, database,
Right.
unemotional person, but he's got an ego just like any other leader.
Sarah, the final sense of your book is stunning. The real cost of the acquisition will fall on Instagram's users. What do you mean by that?
Well, when you look at what Facebook has done, prioritizing growth above all else, making sure that, if they solve problems, that those are the problems that the public is talking about on Facebook itself, and trying to centralize this product so that all of the operations work through Facebook, and Instagram only gets to do what Facebook says they can do. You've got this incredibly powerful cultural entity with more than 1 billion users that lacks the resources to solve its biggest problems. Its biggest problems are not even close to the top priority for Facebook. And that's bad for us as users. And that may be even bad for the company.
Sarah, as we think to technology, these massive giants in 2021, and there's talk about them being broken up or at least regulated, what have you seen in all of your reporting through all of these years that would point to actually the enormity of how these giants are taking over society?
Well, it's really difficult, especially in social media. It's really difficult to start a product that competes with Facebook, because Facebook has what's called a network effect. Once people join a network, there's really no reason for them to join one where fewer of their friends and family are, where fewer of the businesses they follow are. And so that gives them immense power. And now they've got not just that on Facebook, but they've got Instagram in photo sharing, a little bit of a younger demographic. They've got WhatsApp internationally, is such a critical part of communications infrastructure internationally. And so this company has made it very difficult for anyone else to play in that market. And they have one of the craziest things that they do is they monitor what companies are coming up that may even have the potential to compete with them, and then they purchase them, or they try to crush them, or they try to cut them off from resources. And they've done that over and over and over. And that pattern is what has caught the attention of the Federal Trade Commission, the attorneys general in more than 40 states. This is what Facebook will have to reckon with, whether that is just good business practice to try to crush the competition, or whether they're doing it in a way that stifles innovation, that makes it hard for us to move forward and get better products for the people who've built their lives on these platforms.
That was Sarah Friar, Bloomberg technology reporter out of San Francisco, and of course, author of No Filter. Tom, it's been another 12 months. It's been another year with you, and I wish you really a restful end of year, and I look forward to seeing you in 2021.
Well, we will see in 2021. It has been absolutely an extraordinary year, and I really can't say enough, folks, about our team. There has been, as if every other company, every company that we know, a massive technical struggle, and the team of Bloomberg Surveillance around the world, and particularly in London and New York, have been just wonderful. Francine?
Yeah, and we're looking all forward to another fantastic year with you all. This is Bloomberg.